All right, welcome back, everybody. As we mentioned, stock futures pointing to gains to kick the new year off the new year of trading. And joining us right now for that is Stephanie Link. She is Hightower Chief Investment Strategist, also a CNBC contributor. Steph, what do you think? Great year for the markets for 2024. What can we expect in 25?
Good morning. Happy New Year. And thanks for having me on. I love being in the A block on the first of the year.
That's right. First Squawk Box guest of the year.
Yay. Thank you. 2024, just to put it into perspective, we all know it was a good year. It was the 24th best in its history for the S&P 500. And the NASDAQ had the 15th best year in history. Just to kind of put that in context, the S&P 500, the long-term total return for the S&P 500 is 7.7%. We have just had 4 out of the last 6 years of north of 20%. So that all is good, and it's especially good for the consumer and the wealth effect. And so that's something that I keep a very close eye on. So you head into 2025. I think the setup is a little harder because the reason markets have done so well is because the economy has been humming. The last 2 years, you've seen north of 3% in GDP, and a lot of that was fueled by fiscal stimulus. That was a nice tailwind. And I think this administration, while they are very pro-growth, lower taxes, deregulation, et cetera, we're not going to see the kind of fiscal stimulus that we have seen. So I think what you're going to see is a little bit of a slowdown in the economy, maybe something like 2.5%. That's still above trend, and that's still healthy enough, especially, again, if you have a consumer that's hanging in there, which I think they will. I think you can kind of eke out maybe 5 to 7% earnings growth. I think expectations are higher for that, though. I mean, I think I've seen some numbers as high as 15%. I hope that's the case, but that's not what I'm thinking. And so I'm headed into the year thinking we're going to be constructive, we'll have an up year, but I want to look at some of the laggards that really have underperformed in 2024, because I think in 2025 they could play catch up, and they're quite cheap.
Okay, so what are those laggards?
Yeah, so let's start with Target. It's completely out of favor. It's a show-me story, no question about it. But they don't have a traffic problem, Becky. You know Brian Cornell, you know this company. They had 2.4% traffic growth last quarter. The problem is they have a mix problem, and so they're slowly fixing that. And I think they have a chance of getting back to something like 5 to 6% operating margins, which could lead to something like $9 to $9.50 in earnings power for the year, making this a very cheap stock. So I like that one, especially into earnings.
You
couple
like
of the
one,
others that I'm looking at.
Just very quickly with that one, Steph. It's a show-me stock. You think they show you this month after the first quarter is done?
Yeah, I do. I don't think it's going to be perfect. I think they're still getting through a lot of issues in terms of inventories. Remember, inventories actually grew 3% last quarter. I think they're working that down. I think they had some one-time cost issues as well. And so I think you add it all up, it's really all about what they can do on that operating margin. That's what we care about, because 2 quarters ago they had 6.4% operating margins. Last quarter, 4.6%. I mean, that was a dramatic surprise and decline. And so I think they can get back to 5 to 6 in the next couple of quarters. And that gives me confidence in the earnings power for the year.
Another stock you like is Las Vegas Sands, even though that's been under some pressure, too.
I mean, it's down 27% since the year 2000. I mean, it's incredible how it's underperformed. But I think this year sets up pretty well for them because Macau is about 63% of their total revenues. And I think the stimulus in China will help eventually. And I think what happened with them last year is Macau did do well, but they had a lot of renovation work that they were doing, so they lost market share. So I think this year they're going to regain that market share because the renovations are almost complete. And they actually have an analyst day in the spring in Macau, and they're going to talk about it. In the meantime, the other part of their business is Singapore, and that's just humming. So the stock trades at about 11 times EBITDA versus 13 times historical average. And I do think it's probably the year for them to at least see some sort of catch up to the rest of the group.